Hi, this is Mary Chu, and these are your self-storage market insights for September 2021. Self-storage demand appears to continue at an elevated level, and property fundamentals remain strong in August. National street rates for 10 by 10 non-climate controlled units rose 9.4% compared to August 2020, and rates for 10 by 10 climate controlled units increased 10.6% year over year. While rates across the nation saw substantial growth on an annual basis, rates for both 10 by 10 non-climate controlled and climate controlled units remained flat month over month, potentially signaling a slight slowdown in the street rate acceleration seen this year. In August, self-storage properties under construction or in the planning stages across the nation accounted for 8.6% of existing inventory, marking a 20 basis point uptick from July. Similar to last month, it appears storage development activity has started to pick up slightly across the nation, likely due to the asset type's continued strong performance. However, despite the fact that on a national level, the new supply pipeline has increased, approximately half of the top markets saw development activity remain flat from July to August. For a fifth month in a row, Miami saw the largest increase in rates among the top markets for 10 by 10 non-climate controlled units. Rates for this unit type rose 20.2% year over year. Miami also led the top markets for rate growth of 10 by 10 climate controlled units, seeing a 17.2 increase year over year. In August, national street rates for both non-climate controlled and climate controlled units of all sizes saw significant growth on an annual basis. Street rates for standard size 10 by 10 non-climate controlled units remained at a national average of $128, the highest recorded value since Yardi started tracking rates in 2016. The national average rate for similar size climate-controlled units was $146, just short of the record high of $147 recorded in August 2018. This month's deep dives highlight two markets benefiting from rising market demand. Our first deep dive takes a look at the Inland Empire. Historically a key industrial market, the Inland Empire has seen a surge in demand for industrial space, especially as online sales have increased during the pandemic. This rise in demand likely has helped position the Inland Empire storage market for growth as well. On an annual basis, the Inland Empire saw rates for 10 by 10 non-climate controlled units increase 13.6% to an average of $174, while the average metro rate for 10 by 10 climate controlled units was $134 in August, an uptick of 16% from a year ago. Our second deep dive is Atlanta. With companies such as Microsoft, Google, and Airbnb planning expansions in the metro, Atlanta has had a growing allure among tech firms. This growth appears to be helping boost the local self-storage market, which saw rates increase again on an annual basis in August, despite its elevated level of existing storage stock equal to 8.3 net rentable square feet per capita. Year over year, street rates for 10 by 10 non-climate controlled units increased 14.6%, while rates for 10 by 10 climate controlled units fared slightly better, rising 15.2%. For a more in-depth summary of self-storage rent and supply growth, click the report link in the description. Please remember to like, share, and comment. Thank you.